Hi, I hope you enjoyed the video How to Be a Millionaire Trader Part 2, in which I shared my hack of the average traded price versus the last close and the last traded quote versus the average traded price. Obviously, you would have some questions. Now, thank you first of all for the messages that you've sent me and sharing the screenshots of the trades that you've initiated after seeing this system on the video. And I'm very glad that my video could help you make some money. Hey, I'm here to help you make some money. I want nothing else in return. I will not try to sell you any software, my systems, webinars, training programs, etc., etc. I'm happy running my own limited company which trades the markets for a living, and I'm here just to help fellow traders achieve their dreams. I've been trading for 34 years and I've had my shares of ups and downs, and I'm pretty much satisfied by what the market's given me, but I do have a couple of good trades in me left. And in order to get better at trading, I basically work on a statistical model which we've christened the Barracuda. And no, it's not for sale. So I'm going to share output which the Barracuda produces on a day-on-day basis, trade after trade, and I'm sure that it will help you become a better trader. Now, a couple of you have asked me some questions, which is what this video is all about. I want to answer your questions and basically take it from there. The first and foremost, is this ATP versus LTP the only thing that you should watch out for? Now, this question came via a comment section on the video itself from Srinivas Panda. So, Srinivas, no system is a standalone trading trigger or a setup that you should watch out for. Collect as much weight of evidence from the market signals as far as possible so that the probability of success becomes higher. For example, if you notice something, all the three trades were actually shorts. All right. Now, when those trades were pressed as shorts, is there any Fibonacci retracement resistance or extension resistance in the vicinity? Are you at a channel top? Are you approaching a moving average either as a support or resistance and therefore you expect the price to bounce from there? The more weight of evidence you collect, the better it is and the higher will be your probability of success. So please do incorporate other studies along with the ATP versus LTP. Think of it this way. The ATP versus the LTQ is basically your trigger, which you will basically use to fire your gun. But you will have to use your gun sight to aim where to hit, and those other systems are your gun sights. So don't forget the other systems as well. Sushruta Motati asked me a question as to whether I could show this system as a live trade during market hours, and how do you enter and exit based on this system. Now, Sushruta, we have a slight problem here. I'm very happy to be a prop trader running my company, which is 27 years old. I've been trading the market for 34 years, but I don't want to break any laws. Now, as far as I'm concerned, SEBI is basically, it does not look kindly at screenshots of profits and losses, live trades, etc., etc. So if you noticed, this video was released at 6 p.m., which is right after the market hours, and that too showing and claiming to be no 100% bulletproof method. So I don't really want to flout any law knowingly or unknowingly and jeopardize the shareholders' interests that have invested in the company and therefore rub the law on the wrong side. Although, if at all, I do think it could be possible by clarifying with our legal and compliance department, I would be happy to do so. But as of now, I would very clearly not give individual stock buy or sell recommendations. I would not want to show live trading terminals, especially during market hours, trading hours, which is against the law. And how do you enter and exit? Well, the system is basically simplicity in itself. You watch the previous close and you've seen, like I answered Srinivas Panda's question, you basically see whether any resistance or hurdle on the upside exists, or the stock has actually breached a support area and therefore could fall. This, of course, is when you want to short sell. Once that has occurred, notice whether the current price is below the previous trading close. Is the ATP, which is the average traded price, below previous close, and is the LTQ, the last traded price, below the ATP itself? So what you've basically seen is a chain of command. Prices, all three, the highest is the previous close, the lower one is ATP, and the lowest one is LTQ. Once that occurs, pull the trigger. Then you're ready to fire. How do you exit? Now here again, this is very simple. It's simplicity by itself. If I have shorted, for example, in the Tata Motors short sell, if I had shorted Tata Motors at 182.5, hypothetically, and the price is sliding at 182.45, 182.40, 182.35, 182.30, 182.25, as long as the price is falling, I'm making more and more money with each passing tick. I'm fine. Okay, I'm fine. But I note what was the maximum mark-to-market profit the trade was giving me. Once the trade looks like it is surrendering 25% of the mark-to-market profit that I had made at the peak, I'm out of there. I don't want to risk the possibility of a mark-to-market profit becoming a mark-to-market or an actual loss. So the minute the market takes away 25% of the profit that it was giving me, I run out. Does it mean that this could be a bulletproof method of getting out? No. After I square up my shorts, the price many a times plunges. That's fine. My job is to put food on the table every day and take a couple of thousand from each trade multiple times during the day. This is all about hit and run trading. So this is how you get in. How do you get out? I told you this is a trailing stop method. As soon as the price basically takes away 25% or 30% of your trading profits, you're out. Where do you keep a stop loss? Now, since this is a intraday, intra-hour, remember, micro trend trades cannot last more than 1 hour. You're not going to hold on forever. So keep no more than 2 to 3 tick prices as your stop loss. Assuming that you've never seen a profit after you enter a trade and the price moves against you, keep a 2 to 3 tick price stop loss. That way you won't lose more than $1,000 per trade. This system, I have tried it, and believe me, I would say that it has a fair probability of success. So, Sushruta, I hope you're happy with the answer, as is Mr. Srinivas Panda. Gomtesh Jain has asked me this question via a Twitter notification. What would be the stop loss and the profit target? Gomtesh, stop loss, like I answered Sushruta, if at all you enter a trade and it never gives you a mark-to-market profit, 2 to 3 ticks, you're out. And after you've made mark-to-market profits, if the price is taking away 25 to 30% of your notional gains, you're out. I hope, Gomtesh, you're happy with the answer too. The other one was from Amarnath. Does the system work only with short selling, or does it also work with going long? I would say the system works both ways on longs and shorts. Only thing is, in going long, you would want the yesterday's close here, the ATP above yesterday's close, and the LTQ, the last traded quote, above the ATP. So while going long, you would want prices progressively higher, and while going short, the prices would be progressively lower. Now, there was one question via a direct message in Twitter from a handle which doesn't have a name, and it asked me, This question asked me, how much capital do we allocate per trade? Hey, according to me, this was the most critical question of all, and do please keep your questions coming. How much capital do we allocate? I very clearly said in that video, I have traded no more than one lot at a time. And this is a micro trend trade. You will be getting out in no more than 1 hour, 60 minutes. You're not allowed to carry over your trades to the next trading session. So, enough margin for one lot should be okay. Very frankly, since your broker allows you 4x multiplication, even after the peak margin rule came in, you can have 25% of the margin required per lot to be able to execute these trades. But contrary to what is floating around in the Siberia and the public domain about how much small amounts you can start with, I belong to that old world school of thought where the more money you have, the more comfort your mind has in trading. Somewhere in the subconscious mind, you know you can take a hit, you can take a loss and still stay alive and fight to live another day. So don't put all you have into the till, into the pot, and then only to lose it all because you're scared because you have insufficient funds. At least have money to cover the entire lots that you're trading plus a little bit for mark to market and or unfortunate losses. So having a little bit of dry powder or extra money never hurt any trader. Now with these, I wind up this Q&A session. Please keep the questions coming in the comment section. You can even send me messages on my social media accounts. Coming up on your screen are my contact coordinates of how to reach out to me, and I do hope you connect with me and we can get conversations going. Every day post-market, I put up a lot of statistical data from our in-house statistical trading model, the Barracuda, which is not for sale, by the way. I'm sure it will help you become better traders and become better statistical trading model creators. This video is by no means an end to the free tutorials. I'm going to build on more and more trading systems which you will have to use together in conjunction so that your mathematical probabilities of success go higher and higher with each passing video. Like what you saw? Please do help me reach out to fellow like-minded traders by referring my video to your family and friends. The comment section is open to you. Please do leave your comments and tell me what you think of this video. More videos coming up. Vijay Bhambwani signing off for now. Thank you for watching me. Have a very, very profitable day ahead. Bye and thanks.